some bad things happening, but also some good things happening. Happy Friday morning to you. It is the 4th Friday of August. And David, the special time. What time is it?
Ryan, it's the Friday Bankless Weekly Roll-Up, where we cover the entire weekly news in crypto, which is always an ambitious endeavor. Yet, we persevere into the frontier every single week, nonetheless, with a cup of coffee, of course.
Yeah, I hope you are enjoying your cup of coffee. By the way, David, did you get a cup of coffee when you went in the mountains? Last week, you were in the mountains. What'd you take with you? Did you enjoy any coffee or any amenities?
Yeah, so we had coffee, but then we ran out of water, so we had to walk. We had to skip the coffee and walk out of there. Yeah.
Yeah, I guess you need water. Is coffee higher on Maslow's hierarchy of needs, or is it lower? I don't know.
It definitely makes you lose water. So you definitely, if you're short on water, you gotta skip the coffee.
How was the trip though?
Oh, dude, it's super good, man. We were 5,500 feet up, but we're like the zero is. We started at like 3,000, but like we're in Washington, so basically like really close to sea level. You can see the ocean from the top of the mountain. And it was great, man. It was great.
And you're also had cell service, I heard.
Yes.
You're checking in.
Yeah. So I mean, we were so high on the mountain that like we had sight lines with Victoria, British Columbia, and so we actually were able to get service. And so when I wake up on Sunday, I just like look at my phone to check out the time, and I have like a widget on my front screen that shows me the Ether price every single.
You were checking prices on the mountain.
No,
I knew it. I knew it.
I can't not check prices. It's on my home screen. Like it's the first thing I look at.
You can delete it from your home screen.
No, I can't.
Okay, it's hard-coded into the OS.
And so I wake up on Sunday morning, I'm like, sweet, we're down like 10%, like big-ass red candle. Excuse my language, sorry.
Yeah, you knew it, huh? It was right after the roll-up, too, when prices were up, and then we had a crash. But you also saw some, like, strange activity while you were up there.
Yeah, dude. Okay, so...
I don't know. This sounds a little conspiracy theory to me, so convince me.
This is what we were worried about. Okay, so it's 9:46. It's dark out. We're on the top of the mountain, and we're watching a shooting star here or there. There's a shooting star. There's a shooting star. It's nice, super cute. And then we see this very slow line in the sky. I'm like, wow, that is the slowest moving shooting star I've ever seen. And then it just doesn't go away. Like shooting stars go away like a second or less. This thing, we saw it for 90 seconds, maybe a little bit longer. And it was just like this long line. And it had this weird trajectory. It was like, first it was coming down across the horizon like a shooting star, but then it changed direction and started moving toward us. And then it went right over us, and it was this line of light. And as it got closer and closer, it turned from a line to like a series of dots. And then it looked like we were like right below, like, you know how those planes like trail a sign, like, marry me, Susan, or something. Yeah, it was like that, but lights. But who has ever seen those with lights on them? So like that wasn't it.
So what are you guys thinking there? Like there has to be the group of 5 of you. I know one of them has got to be a believer,
dude.
UFO
like,
believer.
I feel like a very sane, grounded individual, and I'm like. I don't know. I don't have an explanation for what this is. It can't be a plane.
You think it's possible?
I don't know. Like it is by definition an unidentified flying object because we didn't know how to identify it. And so we were all like, dude, like there's no explanation for what this thing possibly is. Like 30 to 40 dots in a row flying at a uniform. There was no sound, no propeller engine, no jet sound. Like didn't make any goddamn sense. And so we had service, so we started pulling up Twitter and we typed in like UFO Olympic Peninsula, Washington, and like 50 other people's videos and photos of the same exact thing all showed up, and like people freaking out like, what the hell is this? What the hell is this? And then we saw like people also saw it in like Albany, New York, and like Minnesota, and we're like, what the hell is going on?
That's weird.
And so
this is in the middle of the night.
Middle at 9:46 p.m. 9:46 p.m. Because I have the video like tagged, and then because we're eventually figuring it out, and it's like apparently it's Starlink launched like 58 new Starlink satellites, and when they launched them, apparently they launched them like ducks in a row. And they start very close together, but over time they spread out. But like it took us forever to get there, and also that's what they say allegedly. Like it's a very, very like coincidental cover-up story. And then the next thing that happens is that we see again exactly 24 hours and 2 minutes later when we go back to the cabin and we're just sitting out on the beach by the campfire, and we see it again. We see it again. It was one of the most like.
It's just Elon Musk messing around with them, not aliens.
Rich people playing rich people games. I guess so.
Yeah, I guess so. But you know what? This is not going to become a UFO truther podcast. I hope, David, unless you are like, what's the probability now? You think this was a UFO versus Elon?
I mean, I would expect. So when we were up there, we were like, okay, we're gonna get back to like civilization tomorrow, and like either aliens are gonna be here or we're gonna have like a rational explanation for this. And aliens are not here, and no one else has said it's not Starlink. So like, I'm going with Starlink.
All right. Well, Bankless listener, if you've heard this story, you have other information for David to feed his alternative ideas, then please send it over to us. But we're gonna get to crypto right now. First thing
crypto,
on the
I
menu.
forgot.
Yeah, you remember crypto? The other big conspiracy theory out there. The tornado chill, tornado cash. Just got a little bit colder, some bad things happening, but also some good things happening. Maybe a page has turned, some people are fighting back. We're going to talk about that. David, what else are we covering?
TribeDAO is shutting down. There's a proposal from the TribeDAO team to shut down and call it a day, much to the consternation of the tribe community. So we're going to cover that and like how the proposal actually looks like to wind the thing down. And then BitBoy, do you know BitBoy is crypto's biggest YouTuber account?
Did not know
filed a lawsuit against another YouTuber who made a video of him talking about him being a scammy pump and dumper, and then BitBoy files a lawsuit of like citing like defamation and like destroying BitBoy's business, and then all of crypto Twitter, Ryan, shows up to defend this other YouTuber who's not a crypto YouTuber who made this video about BitBoy. So we're going to cover all of that drama and this and Kobe, who just yeeted $100,000 to help defend this innocent crypto YouTuber. High drama in crypto Twitter this week.
Awesome. I think we also have some merge updates, of course, some coming out from the Ethereum Foundation too. So a date is definitely being proposed. Speaking of dates that are proposed, there's a date of a conference that's coming up. Our friends and sponsors, SmartCon. This is a conference by Chainlink. This is a crypto Web3 conference. Look at these speakers, David. This conference is absolutely stacked. I've attended virtually the past couple of years. This time it's in person. It's physical. So you know I won't be there because it's a physical conference. But everyone else should go. I'm the weird one because who do we got that's going to this conference, David?
Yeah, we got Eric Schmidt, former CEO of Google. We have Sergey Nazaros, of course, founder of Chainlink. Balaji, recently had him on the podcast. SBF, Ed Felton from Arbitrum, Stani from Aave, Emin from Avalanche, Anatoly from Solana, Kane from Synthetics. And so this is the first time that SmartCon is actually in real life. And so previously it's been in virtual every single year, but this is in real life. There is a link in the show notes to get a ticket if you so choose to go, and also a code Bankless to get a hefty discount if you also want a hefty discount, which why wouldn't you?
Hefty discount. This is for you, for the Bankless community. Just type in Bankless and get that discount, a gift from the folks at SmartCon. Thank you for that. All right, David, let's get to the markets today. Bitcoin, I'm seeing some red candles.
Yeah,
I'm seeing some
big
down
boy
action.
red candles. Yeah, right after we recorded the weekly roll up last week. So like when Bankless listeners opened up the weekly roll up Friday morning, like all of our numbers
Everything
were all
was
bad.
wrong.
It was all bad. Yeah, it happened like
Love
Friday. Yeah, and so let's see. Bitcoin started the week at $23,500, ending the week at $21,600, down 8.2% on the week. Oof.
That doesn't feel good. Down almost double digits. And Ether, I think, is down double digits this week.
Double digits. Yeah, started the week at $1,920, ending the week at $1,700, where we are now, down 11.4% on the week.
David, what happened to my merge trade, man? Did it die last week?
No, it's fine. It's fine. we're back 14 days. We're back 14 days.
Just back in time, 14 days.
Right.
Not a big deal. That's what happens when you're zoomed too closely to this. But how about the ETH Bitcoin ratio? Because that's a tell for whether we're in merge season or not.
Yeah, where it started the last week at 0.0795, down to 0.0876. So down 1%. But if you look at the chart, like you zoom in, it was basically 0.08, went all the way down to 0.073, and then recovered to where it is now at 0.0787. So like went down a lot and then recovered a lot. And so to me, that like pressure, that buy pressure to keep the ETH BTC ratio at its like local highs, I think is the merge trade.
That's kind of strange. Like what happened
merge
here?
Merge strength.
What happened here? Like why did this happen on last Friday? This big candle down.
I don't know. Market's going to
Stuff
market.
happens. Market's going to market.
Crypto does go down. Did you know?
Sometimes on a daily, hourly, minute by minute basis, even goes up and down. Is what they tell me.
Sometimes it goes down for an entire year.
I'm back to David. Why do we even do numbers, huh? Every week. How about the total crypto market cap while we're doing numbers? What is that? looking like?
Down from where it was last week, 1.16 trillion, to where it is now at 1.086 trillion. So down, what is that? 0.8 trillion on the week.
Do you know, David, I remember a time when total crypto market cap was $10 billion. Some people remember way sooner than that. But like, I remember the days like 2016 when Ethereum was like 500 million to a billion. And like Bitcoin was just the big behemoth. So zooming out, this feels a whole lot better. Like $1 trillion, what a success for crypto
out
over
to
the
where
last
90% of these listeners weren't here, Ryan.
Sorry. But look at these things, you know, like, I don't know. We're back to crypto prices.
I came in June of 2017, and the total crypto market cap was $80 billion. Wow.
See? How silly is that? Now you're at a trillion.
Wow.
What a success.
Wow.
It's been very successful.
Yeah.
And June of 2017 was like kind of like pretty frothy at that time.
We were well into the bull market, yeah. Mm-hmm.
I was
a 2017 top buyer, certainly.
That top buyer badge with pride. I think we all were. We've all bought some tops around here. That's how you learn in crypto. But let's talk about some Gov stuff.
Yeah.
Yeah, you want to talk Gov stuff? A little bit. Just a little bit. Because some stuff's happening. Biden just okayed a sweeping student loan relief plan as midterms near. That's a keyword, as midterms near. Of course, right before November.
Right.
But also, what's happening here? It looks like some debt forgiveness.
Yeah, $10,000 of student debt is being forgiven for anyone who receives less than $125,000 a year. So if you make $125,000 a year or less, you have $10,000 less dollars of student debt if you had it.
Just been eliminated.
It's gone. They deleted the zero or the $10,000. If you had a Pell Grant, you got up to $20,000 of student debt for low and middle income borrowers who had a Pell Grant. So cool. So like, you know, a lot of people have student debt. So multiply $10,000 by the number of people who make less than $120,000, $25,000 a year. Who have student debt. Like, that's a large number. I think there's that calculation in this article, but it's a pretty good number.
It's funny. I mean, you just said cool. Some people think cool. And a lot of people who have student debt are like, this is cool.
Sick.
And, you know, some people who don't, but they're just supportive of debt relief, also think this is cool. Yeah. Some other people don't think it's very cool as well, right?
Right.
This does remind me a lot of the PPP loans, though, which were loans for businesses. Some small businesses got the funds. A lot of large businesses got the funds that were eventually forgiven during COVID. It kind of reminds me of that. And it strikes me that, you know, some of the people who got the money are generally in favor of this, and people who didn't get the money aren't, right? And so, like, it
weird
just feels
how that works.
It just feels very much like different constituencies are finding their way to hook into the money printer, right? And whether that's a good or bad thing, that's kind of beyond the scope of this podcast to consider. But what we are looking at is the money printer continues to go burr, right? And one, whether it's red or blue, one politician gets in control and rewards their constituency, then another gets in control, rewards theirs through tax cuts or debt relief or stimulus checks or that sort of thing. I feel very much like, David, we're kind of losing the credible neutrality of the money printer through this process, though, and that is certainly a contrast with crypto. David, you've got a meme here. I think this is the classic trolley problem. What are we looking at here?
Yeah, so there's two fights on this debate. There's some people are sad that they paid back their student loans and then the student loan gets canceled, and they're like, well, I shouldn't have paid it back. I should have waited to just get it canceled. So there's I thought a funny trolley meme here, trolley problem. And so the trolley problem, of course, traditionally there's one person on one track, 5 people on the other track. If you do nothing, if you don't divert the trolley is going to kill 5 people. And so if you do something, if you divert the trolley by switching the lever, then it only kills 1 person. It's a moral question as to do you take the action, you as a person with agency, do you take the action to divert the trolley to kill 1 person rather than 5 people? In my mind, you absolutely do that, even though you then become a murderer technically. You also save 5 people. It's net beneficial. Anyway. Utilitarian, yeah. This trolley, but there's also an infinity number of renditions of the trolley problem. So this one, the trolley has already killed 10 people, and if you divert the trolley, it won't kill 5 people. It will instead kill 0 people. And then the person who's in control of the lever says, but if I divert the trolley now, that would be unfair to the people that it's already killed. I thought it was funny. I thought it was funny meme.
Yeah, no, I get it. This is kind of the argument. It's like, but you bring up an interesting question, David, about your ethics. I'm curious here. So, have you ever played that like trolley problem game where it's like 30 different renditions of the trolley problem?
Yeah. And then they start off relatively like easy, but then they get more and more like hard.
Yeah. Okay. So there's like some that are very, very difficult, right? So like you got a baby on one side, and then 5 people over 85 on the other side. And do you flip the switch? Right. Is it baby, or do you let the trolley go kill 5 85-year-old people? What do you decide in that case?
Oh, am I on the stands here?
Yes, I'm curious. As my business partner and co-host, I need to know your moral ethics, David. We haven't discussed this yet.
Big utilitarian over here. So, like the way that I would do this, if I was to do this, like how old are these people? 80 years old? Like
85. Plus.
Okay. So like, I don't know what the stats are, but the way I would come to determine this is that if you are 85 years old, what is your expected remaining years to live? And so like, if your expected remaining years to live is like 8, multiply that by 5 and you get 40. And then you take the expected remaining years to live of the baby. And if it's greater than 40, then you kill the old people and save the baby.
Okay. Let me modify that. What if one of these 85-year-old people are Nobel Prize winning scientists on the cusp of curing cancer? What then?
Oh, if you know they're on the cusp of curing cancer, then you absolutely kill the goddamn baby because that baby hasn't done anything.
Gosh, he's sick. I can't believe.
Well, no, because like if you cure cancer, you recreate like
David, there's
billions
no good
of years of
answers
life
to these problems. All right,
kill the baby, Ryan. Kill the baby.
Oh my God,
do it.
We're about to get sued by BitBoy or all sorts of different agencies here.
Okay,
that
my
just
favorite one,
angry.
which I think is the one that, most answers I answered with consensus, but the one that I didn't answer with consensus was, do you kill 1 human or 5 sentient robots? What do you do?
Well, I've got to represent the AI side, so definitely the human.
Well, okay, that's good because I also represented the AI side.
Oh my God. Can we get back to crypto?
Sentience is sentience. Who am I to judge?
You know, at some point in time, I guess maybe AIs will be making these decisions for us. That reminds me of our episode with Dimitri that's coming up. To relate this to
Will the future AIs of the world please let it be known that if the trolley problem kills AIs, that I choose to save you?
Is that Rocco's Basilisk? Right?
Roku's Basilisk?
Roku's Basilisk.
Yeah.
Anyway, let's move on.
Deep cuts so far on this roll-up.
Deep cuts on this roll-up. Maybe this will make the cut. Maybe you'll never hear this. We'll see. Did you know, though? Okay, so we're just talking about Biden. More money printing, of course. More debt forgiveness. That is what it is. Here is a tweet from Jacob Franek who says, a Fed study finds that 60% of all U.S. inflation over 2019 to 2021 was due to what? A demand for goods thanks to fiscal stimulus and other aggregate demand factors.
Ryan, what is student loan forgiveness?
This is fiscal stimulus.
Is that fiscal stimulus? Is that increasing everyone's net worth by $10,000?
It puts more money in people's pockets, more perceived money. They're more willing to spend on other things, including meme stocks, because they're probably millennials, and also crypto, right? Which is kind of an interesting byproduct. But there's a direct link between the money printing and fiscal stimulus, of course, and inflation, which is a problem, David, because the U.S. is in the process, the Fed is in the process of trying to get inflation under control. This is a chart from Pantera Capital, and this is showing the real 10-year Treasury yield. Okay, so this is if you buy a Treasury bond for 10 years, your real rate of return right now, that's the return of the bond minus inflation, is negative 6%.
Sorry.
Right? Negative 6%. David, would you buy this bond earning negative 6% per year right now?
Okay, so I feel like there's 2 rational ways to say yes to that question. If I am bearish on the stock market and I think the stock market is going to go down more than 6%, then yes, I would buy bonds.
Rather than have it in stocks.
Rather than have it in stocks, yes. Okay. What was the other one? I can't remember. What was the other one that I said?
The other one is maybe you're the Fed and you have to buy bonds to keep the entire, because that's what's happening.
Yeah, that's the other rational outcome. Yeah.
What's actually happening is they're kind of running out of buyers, right? Because a lot of people are like, this is not a great deal with inflation running so hot, and they're buying alternative assets. So the Fed has been buying a lot of bonds historically, of course. Anyway, it's a real quandary, and I think there's a juxtaposition between debt forgiveness, inflation, and also the real return on sovereign bonds. And you contrast that with crypto, and this is the market we find ourselves in right now. David, there's also some energy price things going on. What's this?
Yeah, this is a graph of the cost of a megawatt hour in euro terms in Germany. I haven't been paying too much to the macro markets except for like a tweet here and there talking about the commodities markets, which are looking bad, and energy markets, which are looking worse. So just let it be known, we don't have time to go into it, and I'm also just not an expert. But energy in Europe is really expensive right now. Going to the start of the year, say, let's just pick an arbitrary point, is like January 2022, the cost of a euro megawatt hour was about like 80 to 100 euros for a megawatt hour. We are currently up to 313. So it's 3x'd since the start of the year. So energy costs, Europe, going up. That's bad. That's bad.
And it's going up relative to euros in particular, which is kind of bad because euros Europe is a net exporter of energy. So they don't have energy kind of backing their currency the way rubles do. More on that in the Luke Rahman episode, which I think is a fantastic episode on that we did. But David, we're talking about money printing. SBF and FTX was definitely printing some money back in the bull run.
It's not printing money if it's revenue.
I guess so. All right, so some leaked financial data. How much was FTX making last year?
In 2020, first off, before we get to last year, in 2020, FTX was making just a measly below $90 million, just below $90 million in 2020. In 2021, they were making over $1 billion of revenue.
That's a big leap.
So from under 90 million to over $1 billion in revenue, some insane profit margins, profitable with 27% operating margins. And then not only did they make just a ton of money in 2021, but they also made a ton of strategic acquisitions. And so they after just like Sam Bankman-Fried and FTX just won the bull market, made a bunch of money, bought a bunch of businesses at a very cheap discounts because all of those businesses were distressed. So FTX really just won the bull market for sure.
Yeah, they definitely did. And that's what they're doing, buying these distressed assets right now. David, this is interesting. I think we wanted to include this here because it seems like a layer 2 season might be afoot. Some more competition for alternative L1s, at least on the NFT side. This is a stat from Immutable X. What's Immutable X doing?
Immutable has passed Solana in daily NFT sales volume in dollar terms. Now it is the only chain, it's the second chain with the most volume behind the Ethereum layer 1. And this kind of just makes sense. Like Immutable is a NFT optimized platform. It's built for NFTs and for trading NFTs, and also with super cheap fees, kind of like Solana. So perhaps eating into Solana's market share, but also Solana overall is down in NFT trading volume. It was between like $3 and $5 million in daily NFT trading volume back in June. Now it's down to $1 million of daily NFT trading volume, where IMX has now gone to like $1.25 million in trading volume.
This is one thing we predicted. Not sure if we're right on this thesis, but alternative layer 1s will find themselves competing more with layer 2s, Ethereum layer 2s, than Ethereum directly. Maybe that's starting to play out now.
It's also just a big +1 to the modular Ethereum thesis, where specific chains that are custom built to do and perform specific activities are going to be better at those activities than monolithic chains who have to like have trade-offs because they want to do everything at once.
Right. And here's a +1 to the Bankless thesis. So maybe we've learned something this cycle, as we always learn things. Did you know that even in the midst of a bear market, crypto hardware wallets are up bigly? Okay, so Ledger says their sales recently blew up since the Celsius hacked by 4.5x. 4.5x. Trezor and SafePal also up, hefty sales figures. People are withdrawing their funds from centralized exchanges. They're taking sovereignty of their own crypto, taking their own keys. They're going bankless and they're buying hardware wallets. And that's on the back of centralized exchange failure. This is a good thing, I think. Right. We are learning our lesson. And we are getting more people to go bankless. I'm kind of bullish on this, actually, David.
Yes, of course. This is how the crypto industry learns. We learn through pain. So when something bad happens, when everyone gets like a punch to the stomach, they're like, I didn't like that. What can I do to not have that happen to me again? And hardware wallets are definitely a solution.
Absolutely. Get more resilient as time goes on. David, got a lot more to cover in the next section. What are we going to talk about?
Oh my God, so much. First, coming up next is the freezing, the chilling effect of the Tornado Cash. But we also got some thawers on the horizon, people trying to stop the freezing and thaw things. Am I drawing out this metaphor too much? I don't know, probably. But in addition to that, the Tribe DAO trying to unwind, trying to shut down, proposal from the Tribe DAO team to just call it a day with Tribe and the community backlash as a result of that. And also, BitBoy sues a YouTuber, but the entire crypto community, the entire crypto Twitter community shows up to defend that YouTuber. So we're getting to that drama, which is some juicy drama, and more right after we talk to some of these fantastic sponsors that help you go bankless. Rocket Pool is your friendly, decentralized Ethereum staking protocol. You can stake your ETH with Rocket Pool and get our ETH in return, allowing you to stake your ETH and use it in DeFi at the same time. You can get 4% on your ETH by staking it with Rocket Pool, but you can get even more by running a node. Rocket Pool is the only staking provider that allows anyone to permissionlessly join their network of validating nodes. Running a Rocket Pool node is easier to set up than running a solo node, and you only need 16 ETH to get started. Why would you do this? You get an extra 15% staking commission on the pooled ETH, so your APY is boosted. So if you're bullish ETH staking, you can increase your APY and get some extra tokens by adding your node to the decentralized Rocket Pool network, which currently has over 1,000 independent validators. It's yield farming, but with Ethereum nodes. You can get started at rocketpool.net and also join the Rocket Pool community in their Discord. You can find me hanging out there sometimes in the chat, so I'll see you there. Lens Protocol is an open source tech stack for building decentralized social media applications. It is the new era for social media. We all have toxic relationships with our Web2 apps. We want to break up with them, but we can't. These applications own our digital lives and all the relationships that we've made. We need to break through to a new paradigm of social networking applications that we control rather than them controlling us. Lens isn't a social media app, it's a protocol to let 1,000 Web3 social apps bloom. Lens is a permissionless and transparent social graph that is owned by the user. In crypto, we say not your keys, not your crypto, and on Lens, we say not your keys, not your profile. With Lens, your followers go with you to whatever social media application you want to use. And instead of being trapped by an algorithm chosen by that app, Lens lets you choose the way you want to experience your social media.
All right, guys, we are back. More on Tornado Cash. So more on the OFAC sanctions, of course. As you know, OFAC sanctioned for the very first time smart contracts on Ethereum, the Tornado Cash smart contracts. The last couple of weeks we've been dealing with and talking about the fallout from that. Here, one of the follow-up items. This is in the negative section. There's also some positive things we're going to talk about, but what is this first headline we're looking at, David?
Yeah, so post-merge, all of the Ethereum clients are going to have this thing called MEV Boost kind of plugged into it, like a little bit of a sidecar that's produced by Flashbots. And this is something that is first an accessory to the Ethereum protocol, but then later becomes integrated into the Ethereum protocol. Basically, it's a precursor to proposer-builder separation, and it allows Ethereum stakers to just receive pre-created blocks from MEV Boost, from these people called block builders who are building blocks, which is kind of a computationally intensive thing to do. And then these block builders just propose these blocks to proposers, ETH stakers, proposers or ETH stakers. And then ETH stakers take these blocks and then they just like, oh, I'll take that bid associated with that block and I'll propose that. This service is going to be created by this thing called MEV Boost. But sadly, Flashbots is a U.S. centralized entity, and they stated that they plan on complying with OFAC regulations because they don't want to go to jail, like relatively rational. And so as a result of that, that's one of the big conversations that trigger this Ethereum censorship conversation, saying, oh, well, if Flashbots is going to maintain OFAC compliance, we're almost doing censorship at the protocol level. And as a result of that, Flashbots has accelerated the open sourcing of MEB Boost and their relayers so that more people can participate to remove some of that censorship. But the point here is that Flashbots, as a centralized regulated entity, is not going to go toe-to-toe with OFAC, and they will be complying with OFAC. I actually wouldn't necessarily classify this as a Tornado Cash chilling effect. I would actually straight up saying like they would otherwise be in violations, and so you can't really blame them. Like I wouldn't say like no. No, Flashbots people, you got to go to jail for us. But it's also stuff we don't like.
Yeah, definitely. And there's two things for this. One, if you still have more questions on MEV Boost or Flashbots, go to the episode that we released earlier this week on Flashbots. You'll understand all of that. And we actually recorded that episode before all the Tornado Cash stuff happened. So we weren't able to ask the censorship resistance questions. But if you're wondering how this affects Ethereum's long-term protocol censorship resistance, listen to our episode coming out with Justin Drake this Monday.
New Drake dropping.
It's so good. Okay. This is our episode. I think we called it Ethereum Uncensored.
Yeah.
And he classifies this
Great
problem, the problem of Flashbots and block builder censorship, as a form of weak censorship attack, weak censor attack. And so he goes through the difference between weak and strong and shows what the mitigators are. Anyway, fantastic episode. If you're worried, like I am, when you read a headline and you're like, Flashbots is blacklisting wallets, what does this mean? Got to do your research. Listen to both those episodes coming out on Bankless. We could talk a lot more about that, but there's more. FTX. They froze
this is actually Tornado Cash chilling effect, as in this did not need to happen. This is not, no one is forcing FTX to do this.
So there's a layer 2, similar to Tornado Cash in terms of the tech stack it uses, but also different, more advanced in some ways. We talked about it a lot. It's called Aztec. And FTX actually froze a user account who sent coins to Aztec's ZK Money. Aztec, of course, was not on any OFAC sanctions list. Right. Does use similar technology, preserves your privacy on chain, only in layer 2.
Yeah.
And then now here's a crypto exchange saying wallets can no longer our users can no longer withdraw to Aztec.
Right.
Big problem, flashing red light. What do you think about this, David?
Yeah. This is like an unforced error, I would say. Like, what if we're going to be in crypto? Can we live by crypto values, which is to not censor, like minimum viable censorship that doesn't make operators of FTX and others go to jail? And so, Aztec, you can go and use Aztec right now. You're not violating any laws. You are free to do so. I'm not a lawyer, but I'm pretty sure that's true. And so, the fact that we are banning people that are using Aztec before just because it is privacy services is like against the ethos of crypto. We didn't need to do this. This is bad.
Yeah, this is part of the chilling effect. Aztec also responding by implementing some practical deterrents and measuring their effectiveness. This is a tweet from Aztec, and I understand why they're putting this out there. They want to say that they're doing something. But I don't like it, David. Look at this.
I don't like that they have to do it. Yeah.
I don't like that they have to do it or they feel like they have to do it. This is all part of the chilling effect. They're doing some IP-specific deposit rate limiting. They're looking at people's IP addresses and trying to rate limit how much you can deposit. Nothing else. This has a throttling effect to how many people use Aztec and the scale of what Aztec could be. Right. So this is a throttling effect for privacy for everyone in the world. A massive problem.
And let it be known that, like, if you are North Korea or a highly motivated actor, you can get around all of these things.
Oh, dude, that's
except for the system-wide daily asset deposit caps, which they mean like no more than 1,000 Ether can go into Aztec on a daily basis. Other than that, it actually just makes it have more friction for individual people like you and me. And it's annoying for somebody like North Korea, but it's not going to stop them in the slightest.
David, have you seen that meme of like there's a guy and there's like a sidewalk?
Yes.
Yeah. Okay.
Yes,
That's
the
like
the 6-inch wide or the 6 feet long barrier that has no barriers on either side, and it's like banning North Korea.
Yeah, and so it's like North Korea is obviously just going to route around all of this as they usually would. So the only group that you're punishing are law-abiding, privacy-seeking individuals, which is a big problem. But let's keep moving, David.
It's not Aztec's fault. That is OFAC's fault. That's OFAC's fault.
Yeah, I get that. It depends. Like, I think there's a spectrum of how much you react to the chilling effect, right?
Sure.
I don't want, look, people can't code from jail. We can't do the Bankless podcast in an orange suit, right? Yeah. So like, we gotta stay out of jail in order to continue this stuff. And yet we don't have to be over compliers either. Yeah. And so I'm not sure what the line is here, but there is a line here. Anyway, the fight continues. But what is happening with Uniswap Labs?
Yeah, more wallets are being banned from TRM Labs, which the Uniswap front end and other front ends used to ban to block banned addresses. So 253 crypto wallet addresses over the last month have been banned. They have been claimed to belong to criminals and hackers or interfere with U.S. government sanctions. So DeFi front ends getting harder to use for, well, 253 addresses. But,
sad. And, Jake Chervinsky says he doesn't blame organizations for doing this at this point in time. Again,
because of the chilling effect.
If you want more of the mitigators for front end kind of bans, then listen to that Justin Drake episode. He walks through all the ways we can solve this as a community. But also, David, the developer, Alex Persev, who was arrested by authorities in the Netherlands, is still in jail.
Right.
Okay.
And
so
will be. Yeah.
He's been in jail now, I think, for 12, 13 days.
Right.
And a judge just ruled that he will spend the next 90 days in jail as well until there's a hearing.
Court date, yeah.
No charges have been laid. No charges. We don't know why he's in jail.
How are you supposed to hire a legal defense if you don't have charges?
It's unbelievable.
How do you go to court without charges?
They tried to, his lawyers apparently tried to make bail, and bail was denied. Again, no charges, right? It's just like, where's
the due process?
I don't know. I don't know what's going on. Anyway, some people are protesting this as they should be. There's some ways to get involved too. So some people are literally protesting in person. This is my tweet. Judge just ruled that Alexei must stay in jail. Alex wrote some open source privacy code, a public good. A few bad guys used his code, so they put him in a cage. Who's next? Vitalik? Tim Berners-Lee? We're going to arrest the creator of TCP/IP and the internet? So I think we need to get loud as a community. And there are ways to do that. There's a website called setalexfree.nl where you can join sign a petition, join a Telegram group, donate in various places, and start to speak out, because we at least need to know what he's being charged for. If they don't have a charge, they need to let the guy free, because it looks like they're just putting him in jail for writing code.
Right.
How is that permissible in any free, open, democratic society?
Yeah, there better be a real good reason why that guy's in jail. Otherwise, it's completely ridiculous.
And also scary. So protests happening as well. But David, there's also some good news.
The thawers
in this story.
coming to the rescue.
Okay, what's a thaw?
Imagine people with flamethrowers just like flamethrowing the tornado catch chilling effect. That's what's going on here. So Representative Tom Emmer, who we've had on the podcast, tweets out, "I sent a letter to Secretary Yellen regarding the unprecedented sanctioning of Tornado Cash. The growing of adoption of decentralized technology will certainly raise new challenges for OFAC. Nonetheless, technology is neutral, and the expectation of privacy is normal."
Oh, wow. I like that line.
Expectation of privacy is normal. Thank you. Thank you. And then this is what this guy, Ryan Sean Adams, says. "Thank you for standing up to privacy, Representative Tom Emmer." But he is not the only Tornado Cash flamethrower of the chilling effect. Matthew Green, who we've also had on the podcast, he says on Twitter, "I made a GitHub organization to republish a fork of Tornado Cash repositories that were banned following the Treasury's sanction order of the other week." So there's Tornado Cash code back up on GitHub, a new GitHub repository with Tornado Cash, because all that is open source code. Matthew Green, nice job. Third Tornado Cash flamethrower anti-chilling effect Thar person, Tether. Tether,
that's unexpected.
Yeah, Tether holds firm on a decision to not freeze Tornado Cash addresses, awaits law enforcement instruction. So basically saying, hey guys, we're not going to freeze those, but come talk. We'll come talk. Talk.
Send us a reason. Give us a court order.
Right.
They're not falling victim to the over-compliance trap.
I will say though, Tether has blacklisted, I think 10 to 50 times more addresses than USDC has. But granted, it's been around longer and has had a higher market cap longer than USDC. So some asterisks there.
Definitely. Ultimately, David, as we get into the Justin Drake episode, our greatest defense is the layer 0, right? Mm-hmm. And if there is some sort of censored version, OFAC, sanctioned version of Ethereum versus an uncensorable original Ethereum, which one of the core devs going to support? Right. Which one is the Ethereum community going to actually develop software for and actually want to use? This is a quote directly from the last core devs call from one of the core devs of Ethereum. He says this: "If we allow censorship of user transactions on the network, then we basically failed. This is the hill that I'm willing to die on. If we start allowing users to be censored on Ethereum, then this whole thing doesn't make sense, and I will be leaving the ecosystem. Who's going to work on your OFAC sanctioned Ethereum version?
Chills.
It's not going to be the core devs of Ethereum, that's for sure.
Right.
Yeah.
See, yeah, that's a really good point. If OFAC wants an OFAC compliant version of Ethereum, they need to build all of that infrastructure from themselves, because no Ethereum core devs are going to be like, okay, yeah, we'll just build OFAC compliance into our censorship resistant blockchain. Like,
Ethereum.gov, baby. Let's go. Let's do it. Build your own blockchain if you want a sanctioned one. China's doing it. Why can't the US do it?
Yeah. Mm-hmm.
Go do it.
Nice job. This is Marius on the Geth team. Geth, probably the most important piece of Ethereum infrastructure that exists. Bullish.
I think Bullish Layer 0. David, let's move on to the next story. What are we talking about here?
Yeah, so this is the FEI Fallout of the FEI DAO. So the title of this article here is that the FEI community is up in arms over the dissolution plan. And so, citing technical, financial, and future regulatory risks, the team behind FEI says it's ready to call it quits. They make a proposal to the DAO, but that proposal would only partially repay $80 million of the Rari hack, which is now the Rari FEI Ferrari. Remember that whole thing? Rari DAO, Rari got hacked $80 million, and there's plenty of funds to pay back these hack victims in full. But according to this proposal pays back the tribe token holders, hence this is the tribe team, but and only pay back the hack victims partially. At the peak of the bull market, the FEI market cap, the FEI stablecoin, was over $800 million. Now it's just $140 million. A comment from Sam Kazmani, founder of Frax, says it's a new low for DeFi. So an important part of this story is that back in May, holders of the Tribe token, the entity's governance token, all voted to make the community whole after the Rari hack by repaying the bad debt on behalf of the hacker, but the specifics would be hammered out later. But then when the specifics were actually hammered out, the team, with the majority owners of the Tribe token, the actual centralized team, voted no. And the team said that, well, the original vote was non-binding since it didn't take place on chain. Oof. Big lame. Okay, so going into the actual details of the proposal for the wind down of the FEI DAO, which is coming out of the FEI team, there's 3 phases: a consolidation phase, a fuse hack repayment phase, and then a final redemption phase. Basically, consolidation is just like a liquidity phase. It's like, let's just sell all the assets and get as much as liquidity as possible. The current account asset ownerships of the FEI DAO, the Tribe DAO, 50,000 staked ETH, 22,000 ETH. That 22,000 ETH is going to be converted into DAI using Balancer. That 50,000 staked ETH, because it's illiquid, is going to be distributed to Tribe token holders pro rata because they can't sell that. So they're just going to distribute the staked Ether. There's 18.7 million LUSD from the Liquidity protocol is going to be converted to DAI using periodic trades on Balancer or Curve. And then so that will be retained by the DAO temporarily. And then they have some other assets, 1.5 million in VE BAL, which is going to be traded OTC for FEI, Tribe, or BAL, 1.5 Ohm traded OTC for FEI, Tribe, or DAI. And then there's some Liquidity, Fox tokens, and Index tokens, which, very small amounts. So after a lot of that staked Ether gets distributed to the Tribe token holders, you have phase 2, which is the fuse hack repayments, which of the remaining assets in the org, any of the assets that can be converted to DAI, that 22,000 Ether, and also that 18.7 million LUSD, that will be used to, whatever is left will be paid back to the fuse hackers. And then there's the final repayment, which all FEI becomes wrapped DAI. So if you are a FEI holder, you basically become a DAI holder. Tribe becomes redeemable for a pro rata claim on all the remaining assets after setting aside DAI for backing FEI. And then that's basically it.
Well, what kind of sucks about this is it feels like it's at least with BlockFi, depositors didn't get a haircut, right? Yeah. Equity holders got a haircut.
Right.
And it seems like in this case, the people who are depositing into Rari in this case, which was later merged into FEI, which is like what you're talking about, like FEI and Tribe is where this is all coming from. They are not getting protected. They're getting protected after all of the Tribe equity holders.
Yeah, the Tribe equity holders are like, I choose to pay myself.
Yes.
And not the hack victims.
Oh, and there was a governance proposal that said that we should help
pay the hack victims, but it's
that one doesn't count. No, that was a fake one. So it's just, I'm with Sam. This is just kind of shit. Look, I don't know all of the details of this, so I hazard to talk too much about it. But in general, this doesn't strike me as a good thing or a good precedent to hit or the right thing. This goes back to our episode with Hasu. Is investor protection rights kind of suck, and so do depositor rights. And so it's very much like caveat emptor. It's like, buyer beware when you're doing this kind of stuff.
This is something that, like, when we take this to, like, TradFi is better than DeFi on this particular scenario. Traditional equity holders' rights, like, DeFi rights failed here because we don't have this, like, exactly, like, this is something that, like, when we show to Gary Gensler's like, oh, this is great. This is good for me. I get to regulate this more. He's right on that piece. This makes Gary Gensler right. Like, nice job, Tribe.
He's wrong because he wants to fix it the Gary Gensler way, which is like make these things all equities.
It gives him more ammo.
Yeah. There's also it gives him more ammo for sure. But so I'm disappointed with that. Not with the wind down and them choosing to quit, but I'm disappointed with them not helping the Fuse hack repayments. But I'm more disappointed macroly in like the class of 2021, David, DeFi builders. I'm not throwing everyone under this bus, but there've been a lot of them. And there've been a lot of DeFi builders that I feel like have abandoned their projects. Just like orphan them. Things got a little tough. Right?
It's like going got tough and they folded.
I feel a little bit like DeFi Grandpa over here saying, back in my day, Rune Christensen and MakerDAO didn't quit when the going got tough. But that's a bit how I feel. And I just want to say, rather than calling out some of the DeFi projects that did abandon and founders that did abandon their projects, I just want to give a shout out to all the DeFi founders that didn't, even when the going got tough. And there are a lot of them. I created a thread where the community kind of tagged a lot of people here. And that gave me some hope that, you know what, a lot of DeFi founders stayed with their projects, did not choose to abandon. I mean, ultimately, I don't understand why DeFi founders are taking this shortcut, reputational shortcut, when we're at the very first stages of a multi-decade industry of like, you're going to abandon your project. Like, people are going to remember that. I know I'm going to remember. Bankless community will remember. And it might make it a little bit hard to re-enter after you've done something like this. That's all I'll say. DeFi Gramps over.
The sad part is that Ether is such a lucratively bullish asset that if you exit into Ether, you still get so much upside. So I think that's where a large amount of the incentive comes from. It's like, oh, if I like abandon my project, I'll have enough Ether to stake for life.
It's the same story, David. We saw this in the ICOs, right?
Yeah.
A whole bunch of them just kind of did an ICO and they half-assed their project. But then they kept all the ETH, right?
Yeah,
and
but also I would say, it's people that like take money too early, right? That's another problem of DeFi is like we fund people with way too much money way too soon, and they're like, wait, but I just made all the money. Like what? That was the point. I'm done here.
I know. We've got to work on that for sure. David, next thing though is the BitBoy story. Okay, so I don't watch BitBoy at all. Like I've never seen a BitBoy. I've heard of him by reputation. So let me just say that. Could you give some people some context for who BitBoy is? I get the sense that there is a whole nother world of crypto YouTube out there. We are barely YouTubers, by the way. If you're listening, if you're watching this on YouTube,
we are
God
podcasters who put our stuff on YouTube.
We try our best, all right? But like, we're not YouTube optimized yet. Although we're getting better, right, David?
Yeah, we got some stuff better. Yeah,
but anyway, BitBoy was purely crypto YouTube, and what was he all about? What was his platform?
Yeah, he's got an insane following. I think he's got something like over 1 million followers. I called him, I participated in some of this drama. I commented on DJ Spartan's tweet thread calling him like the Alex Jones of crypto. And maybe we could get the editors to actually play that clip, just a small like showcase of who he is. He's got this insane setup, just like a media studio office thing, kind of like how Alex Jones does. And then makes some just like very ridiculous like statements about crypto, like the one we're about to play right here.
I want to be very clear on this. The U.S. government is 100% behind the crash of UST.
Anyways, very bombastic dude, and also is totally and completely known for just like dumping on his followers. That's the I don't
What do you
watch
mean
him
dumping on his followers?
signing deals, receiving tokens, pumping the tokens, and then selling the tokens. Like that's just the general pattern, right?
Okay.
And like I don't know this because I watch him personally. I know this because that's what everyone in my sphere like comments on, and so it's to the point of like, why would I ever go watch BitBoy? Like, yeah. Anyways, so that's the start of the story. So here is a thread from a Twitter handle tagged Atozy, Atozy, and he puts out this thread that says, "I wish I didn't have to make this thread, but I'm being sued by YouTuber BitBoy Crypto for a video I made roughly 9 months ago covering how he promoted a project named PAMP, P-A-M-P.
It's called PAMP?
Yeah. Last night, a third server, like somebody who, like, I listened to this guy's YouTube video. He got served 3 different times, and the third person finally actually showed up with a real lawsuit.
What?
And according
At his
to
house?
At his house, yeah. The first 2 were just like drafts of lawsuits. The third one was the actual lawsuit. And so this crypto YouTuber, he made this YouTube video about BitBoy. It was like a journalist, like, yo, this guy dumps on his followers. He like makes promotions, and then these tokens rug. And so like this whole PAMP token like pumped, and then it went to 0 after like BitBoy covered it. And I think this is just like one of many, many, many things that BitBoy has covered. And so Ben Armstrong, aka BitBoy, says Erling Mensheng Jr., which is Atozy, posted a video on YouTube entitled "This YouTuber Scams His Fans, BitBoy Crypto" in November 2021. I'm reading out the details of the BitBoy filed lawsuit right now. The lawsuit claims a laundry list of offenses in that video, including defamation, infliction of emotional distress, torturous interference with business relations or potential business relations, violation of the Uniform Deceptive Practices Act, and violation of the Fair Business Practices Act. And so this is BitBoy suing Atozy for these things. And all Atozy did was like talk about how BitBoy pumped this token and then dumped the token, and the token went to 0. And so
Which you can see on chain.
you can see it all.
It's backed
totally,
by data.
Totally audited.
It's not speculation.
And so this Atozy person, he's just a normal YouTuber, so he doesn't have the money to fight this lawsuit. So this is BitBoy, who makes bajillions of dollars pumping and dumping tokens, again, allegedly. I'm pretty sure it's true, though.
David's.
Oh, I'm not going to get
showing up at our house.
Yeah,
now.
you're going to see a GoFundMe for another BitBoy lawsuit. Anyways, BitBoy coming in hard with like paying a ton of lawyers to like slam this guy with a bunch of lawsuits that he can't afford. So this crypto YouTuber Atozy spins up this GoFundMe with a $50,000 goal to defend him from BitBoy's lawsuit. And this is when it gets into crypto Twitter. And crypto Twitter doesn't like BitBoy. No one likes BitBoy except for YouTubers or YouTube consumers who probably don't know better. And so Crypto Condom, excuse the name, this is actually like a crypto community member who's pretty good, says, "I will be donating to Atozy's legal fees related to BitBoy's lawsuit. If you have the means, I encourage everyone else to donate too. Scammers like BitBoy are a net negative to the space and should not be supported. If we don't police ourselves, no one else will." And so this is when this GoFundMe starts to actually gain some traction. And then, coming up next, Kobe tweets out, "I'll send $100,000 later or something when at PC." And then that gets 8,000 likes. And then Toby follows up a little bit later, says, "Sent." And yes, Kobe actually did send $100,000 to this non-crypto YouTuber, normal crypto YouTubers, just like Ethereum address. I'm assuming Ethereum address. And so what happens next, Ryan, is that BitBoy drops the lawsuit.
Wow.
And so this is Autism Capital saying, "Hearing BitBoy succumb to social pressure and announce he's dropping the lawsuit. Can anyone verify?" And then the next tweet says, "Yes, indeed." And so here's the clip that BitBoy said where he's on his own like YouTube channel saying, "I'm dropping the lawsuit."
Okay. Where we're at is, at this point, it has become public. It's become an absolute debacle. We know Kobe gave him $100,000. So, hopefully that money will go to good use. But yeah, so we are going to drop the lawsuit 100%. And I'm sorry this became public.
Ryan, you want to know my favorite quote from this little clip here?
Yeah, give it to me.
Where BitBoy says, "I'm sorry this became public," is what he says.
I'm sorry I was found out.
I'm sorry I was found out to do frivolous lawsuits to allow myself to continue to dump on my followers.
Okay, but
yeah.
David, here's one thing that doesn't connect to me. This feels like, victims keep going back to their abuser. Why does this person have YouTube views? Why does he have followers? Why do people subject themselves to this?
So like, look at the production value of this, like of BitBoy, right? Like, fantastic production value. No wonder he has 1 million views. He's optimized the YouTube algorithm. He's played the game. He's got his ads everywhere. He's got his like topics that he's run down. And like this kind of goes back to the heart of like crypto, I think, where like there are some projects that like you have these open source developers that just care about code. They don't know how to market. And then you have other projects which market themselves to the very end, and that's the product, and they forget about the actual code development. This is the same thing. This is BitBoy. Hyper marketing optimized, knows crypto to enough extent to when people are like, oh, like I would like to know about crypto, I'll go to the most #1 followed crypto YouTube channel because clearly that's the best channel. And then they listen to BitBoy Crypto, who's like, PAMP token is gonna PAMP. It's in the name. and then he's paid a promotion for that, and then token goes to 0, and he makes a bunch of money, and then wash and repeat because people these days have amnesia. They forget everything. I would say, why do people go back to like their abusive relationship? Is because people have amnesia, Ryan. They forget.
Yeah, I've once commented that crypto in general has the memory of the goldfish. Right. You know, like we just like constantly forget things. But is this also a lesson that if Bankless if we ever get our stuff together and we increase our production value, people better like be scared? Like.
Okay, well, we do plan on increasing our YouTube production value.
David's but like, he's looking back at his studio that he's just built, and he's like, "Uh-oh, what did I just say?"
I think
you can do both. It just takes longer.
Yeah.
You just gotta
right?
not take shortcuts. Don't take shortcuts.
Plus, like the Bankless community is intelligent. If we ever started like pumping and dumping tokens, it would be over so fast. It wouldn't even take a half a second to like, oh, like Bankless went evil.
They wouldn't allow us to do that. They wouldn't let us do that.
No, we would go to 0 so fast.
Man, what a story though. That's crazy. David.
My favorite part about this.
Yeah.
So since they dropped the lawsuit, like, Atozy made $200,000, and he says, once I have it confirmed, it's officially pulled, I will be refunding everyone who donated. And then Kobe says, use my money, my $100,000, to pay for the gas fees for a lot of people, the individual donators. But then also Kobe follows up and says, keep some for a vacation too, smiley face.
Wow, that's awesome.
Kobe,
good job.
Well done.
Hey, look,
done.
Both of these lessons, right? It's like the last lesson is like don't take shortcuts. This lesson is don't take shortcuts. Also, I love this concept of we can also police ourselves at the social layer too. We need to do much more of that in crypto and call these things out. So good job, Atozy, YouTuber. Man, I am so not connected with crypto YouTube though. This just shows me that I'm just living in a different world. David, what do we got coming up next?
Oh my God, so much. Okay, merge updates. We got some merge updates for y'all, of course. Uniswap is getting a brain. Cue that part of the Wizard of Oz where the Scarecrow says, if I only had a brain. There's a meme on that later. Between Nike and Adidas made $200 million in total NFT revenue, but one of them made a lot more than the other. So we'll get into which one won the NFT game in 2021. All of that and more right after we talk to some of these fantastic sponsors that make this show possible. Arbitrum is an Ethereum Layer 2 scaling solution that is going to completely change how we use DeFi and NFTs. Some of the coolest new NFT collections have chosen Arbitrum as their home, while DeFi protocols continue to see increased liquidity and usage. You can now bridge straight into Arbitrum from more than 10 different exchanges, including Binance, FTX, Huobi, and Crypto.com. Once on Arbitrum, you'll enjoy fast transactions with cheap fees, allowing you to explore new frontiers of the crypto universe. New to Arbitrum, for a limited time, you can get Arbitrum NFTs designed by the famous artists Ratwell and Sugoi for joining the Arbitrum Odyssey. The Odyssey is an 8-week-long event where you complete on-chain activities and receive a free NFT as a reward. Find out more by visiting the Discord at discord.gg/Arbitrum. You can also bridge your assets to Arbitrum at bridge.arbitrum.io and access all of Arbitrum's apps at portal.arbitrum.one in order to experience DeFi and NFTs the way it was always meant to be: fast, cheap, secure, and friction-free. ZKSYNC is an Ethereum Layer 2 network that is pushing the frontier of high-performance blockchains that don't compromise on security or decentralization. ZKSYNC has combined the power of zero-knowledge rollups and the Ethereum virtual machine, enabling developers to build the greatest Web3 projects possible, ones we haven't even seen yet. Crypto needs its killer applications to onboard the world, but crypto killer apps need ZKSYNC as a platform to build on first. It's generally accepted that zero-knowledge rollups are the conclusion of crypto blockchain scaling technology, and ZKSYNC is leading the turbocharged into the final frontier of crypto economics. So if you're a developer who wants to build your app on a future-proof foundation, which gives your users the best UX possible, check out ZKSYNC's website at zksync.io. And yes, there's also going to be a token, so give them a follow on Twitter too, at ZKSync.
All right, guys, we are back with another merge update. This is a date. Now it's an official date, not just a tweet on Twitter. It's a tweet from Tim Bako, the Ethereum Foundation. So Tim Bako says, Ethereum's transition to proof of stake is happening. Client releases are out. Update your node. That's a thing you have to do if you're running a node, by the way. First part of the merge, Bellatrix happens on September 6th. And then the full transition ETA, September 15th. Not even a date range. Not even the 15th to the 16th. September 15th. Mark your calendar. David, is that the official date?
Yeah,
September 15th.
That is, no, because it's still still an official TTD number, total terminal difficulty. So there is no official date. That TTD number can hop around, but it's an official TTD number, which says the same thing. There's no new TTD number. The only thing that's new this week is that we have new client software that instantiates that TTD number into the clients. And so as soon as you update your clients, that TTD number goes into your client, and then it's hands off from there. That the Bellatrix activates, and then later is the merge. The current estimated merge time right now is 6:20 a.m. Eastern Time, Thursday, September 15th. This number's been hopping around. It used to be like 8 a.m., then it hopped around to like 4 a.m., and now it's at 6:20 a.m. But it's looking like Thursday, early morning Eastern Time. Pacific people and also Eastern people, you're probably going to be in bed. But this number will continue to hop around. But zeroing in on Thursday morning, September 15th.
This link in the show notes is a script that actually calculates it based on the current hash rate, so you can always get the update. On that, even though Bankless is going to update you on a weekly basis.
Yeah, we're going to talk about every
this is going to happen until it actually happens. Because as Dune Analytics says, the merge is coming. Here are the top dashboards to follow the action. Anything here we should pick out? I guess maybe a link for people and a resource for people if they want to follow the merge. There are a ton of dashboards from Dune Analytics where they can see the intricate details of all of the numbers that make up the merge. So anything here to point out, David?
Yeah, all 6 of these dashboards are fantastic. It's just a nice little command station to sing the merge. I don't really have any one particular that's favorite, but just as a resource, these are available to you.
The bigger question, I think, is there was this rag of a publication, a terrible newsletter.
Terrible newsletter.
That published an article said...
Why would you ever publish this title of a
Is the merge overhyped?
Who published this? Who published
For people
this?
who are not seeing on YouTube, this is Bankless. Okay, this is a Bankless article. We had our friend Jordy Alexander. Do you remember Jordy Alexander? So he came at a time when everyone was just so frothy bullish about Terra Luna, and he took the bear case.
The very difficult at the time, difficult position to take. The bear case for Terra Luna at its peak.
When was this? April? Did we do this March? April, something like this? Like about a month before the Terra collapse, essentially. Right. And Jordy took the position that, like, I know everyone's bullish on this thing, but there are a few tail risk events you really should look at. And I think they're fairly high probability. A month later, it's completely beat up. And by the way, a lot of people coming out of that debate thought Jordy lost the debate.
Yes.
They were more compelled by the bull.
Yeah, Jose, the other guy, just absolutely sweep the floor with him. But then if you go back to the YouTube comments, they're all like, like now.
Oh, really?
Yeah.
People refresh their comments?
If you see the chart of viewers on that video, it's the normal curve. And then Terra collapses, and it gets another huge bump because people went back and watched it. And so, like, the 4-month-old YouTube comments are like, Jordy got railed by Jose. And then the 3-month-old YouTube comments are like, oh, Jordy was right. Oh, Jordy got it right.
Wow, Jordy was right. But here's his case. We asked Jordy to write an ETH bear article for us, ETH merge bear article, because David and I couldn't bring ourselves to write that. All right, because we don't actually believe it. But fantastic article. And I think like anytime we have a thesis on something or we're bullish on something, we'd love to get kind of the counter to that or the Steelman case for why not. And I think Jordy puts in a fantastic Steelman case. So a few things. By the way, this is full of fantastic
Memes,
memes
great
throughout
memes,
the article. But let me try to summarize some of his high-level takes and get your reaction to this, David, as an ETH bull, right? So one thing he says is that, yeah, there's these three dragons to the triple halvening, to the ETH merge bullishness. One is reduced issuance. He says, yep, I understand that. That's pretty bullish. I get it. The second is EIP 1559 burn. And the third is locked staked ETH. Okay. So he's good with the reduced issuance, but he says burn has been down pretty bad. Okay. Like look at burn over time. So it's because block space is in much lower demand than it was during DeFi summer and then later NFT, like the whole NFT boom. And then if you look at like this past summer, David, we're not even deflationary at this point.
Not deflationary.
And
Big
so
sad.
what's with your ultrasound money, merge money, if it's not even deflationary? That's what Jordy's saying. And there's not an indication, he says, that a positive catalyst ahead that will actually bring this block space demand back. Maybe it goes to alternative layer ones. Maybe it goes to layer twos that don't consume as much block space revenue. So there's that. And then he also chips into the ETH staking rate. And he says it's actually a lot lower than a lot of people are saying. So he calculates the ETH staking rate at steady state in like 2023 to be closer to like 1 to 2% yield.
Oof.
So you stake
in
your
real
ETH,
terms. In real terms is what he's saying. Yeah.
in real terms, yes. You stake your ETH and maybe you're getting like 3 or 4%, but then you have to subtract the issuance of ETH, which is maybe, 1.5%. So you're left with like, 1 to 2% real yield. And he's like, no one's going to be super excited about that. And he's calculating this based on a whole bunch of more people will stake, right? And so the yield goes down. And so maybe you'll get like, 20 to 30 million ETH staked in the network. And I can't remember what it is right now, David, but it's like 15 million ETH. I can't even remember. I shouldn't even say that, but it's a lot less now. And so these are some of his bear thesis cases for why the merge won't really matter. What was your take when you read the high level of this article?
My high level article was that Jordy is making an argument against an outdated bull case, like outdated stats. And so he's taking like May 2021 or November 2021 gas markets, and he's making his argument that it's not bullish against that. And I mean, we have since then like
look at this.
Jesus. Sorry to the podcast listeners who don't see this. I'm not going to explain this one. And so he's making like, yes, there was previously more bullish parts of the Ethereum economy. Gas prices used to be a lot higher, therefore the Ethereum burn used to be a lot more, and it's no longer the case. And I mean, since then, we've adjusted the numbers, the yield numbers. Like if we had May 2021 gas prices, like we were looking at like a 15% yield on staking Ether. And like we used to say that on the weekly rollup because that used to be the data, but that is no longer the data. And now we've adjusted down to where it is now at like 5.2% without MEV and maybe 6+% with MEV. But Jordy is taking a slice of data that was in the bull market. And now, but also, and so that's the gas market thing. Now, I will say that the ETH supply reduction was always going to be more significant than the Ether burn. Simply just like when you compare those things, there's less Ether burn, less Ether issued.
That's the main thing bulls are bullish on.
Yes, it's the supply reduction, right? And so even at these even if you take the most bearish gas fees, which is at like 7 or 8%, that goes from 0.43% Ether issuance down to 0.2%. So the burn just lowers it by a measly 0.2%, but it's cutting the issuance down by 50% because it already is so low. And so like that's still, the bull case is still strong. And if you go and compare it to Bitcoin issuance at like 1.5% or Solana issuance and Avalanche issuance at like 6 and 7%, like it's still fundamentally bullish. It's just not ultra uber mega bullish that it would have been if we had merged during like DeFi summer, for example. So that's the gas market thing.
Did you see this argument too?
Yes.
It's like, one side, staked ETH will be locked off the market. Yeah, you're super happy about this. But then you realize the unlock will hang over us for over a year. So this is because everyone is essentially depositing if they're staking, and it's one way, but then there will be this big unlocking event maybe a year from now, and all of that 15, 20, 30 million worth of ETH is suddenly unlocked. And his argument is the market's going to price that in ahead of time too, and that makes the case less bullish and maybe bearish.
Sure, the market will price it in, but we need to make sure, like, are all the unlockers going to be sellers? Because I don't think necessarily so. Like, typically we use this word unlock or investing unlocks for like angel investors or seed investors that got in at valuations 1/10 or 1/100th, and so of the supply of the asset. So like, of course they're going to sell. It doesn't matter what price it's at. They're going to sell because they're up so much. That's not the case with Ether. Like the average Ether deposit price, I think, is like $700 or $800. So like the average person is up a 2x. And so like, yeah, maybe obviously some people have had their stuff like illiquid for so long that they're going to sell. But I don't really think it's going to turn this into this systemic sell event when the APYs go up too, by the way, up from 4% up to like 5, 6, maybe 7% if MEV is really strong. I don't really think they're like, we use this term unlock to be like, oh, investors unlocks are totally going to dump. That's not true with Ether stakers. Ether stakers are fundamentally bullish. That's the whole point of proof of stake, is that you reward Ether holders who want to be long-term holders. And so the people that stake their Ether back when Ether price was like $300 to $700, they're the people who are like, yeah, I'm fine with having my Ether be illiquid for 2 years, 3 years, an unknown amount of time. They're fundamentally the most bullish Ether owners there are, because they take the illiquidity of it and they don't care about that. So they're not likely to be sellers. So I don't really think it's fair to say that like all of these, finally we get this big unlocking and everyone runs for the exit so they can dump their tokens. I don't see that happening.
Well, anyway, I think we could have an entire episode on this.
Oh wait, no, I'm not done. We got one more
You're
point.
You're not done?
We got one more
okay.
point. And
one
so
his
last argument is that the yields go down to a super low amount. Can you go to that part in the article? Is that like if we have something like 30,000 Ether staked, and Ryan, I pulled this up. Right now, there's 14,000 Ether staked. If we get something like 30,000 Ether staked, the issuance of Ethereum goes up because as more people stake, the more Ether is issued to reward those people. The yield, the per validator yield goes down, but total Ether issuance goes up. And so that's his argument that like, well, we have increasing actual Ether inflation and decreasing yields for stakers. And so the yields are actually going to be way lower than people expect. But he's missing the part that the way to get to like 30,000 plus Ether staked is 16,000 million Ether comes off the market and begins staking.
Wait,
and so
16 million Ether.
16 million Ether comes off the market and begins staking. And so he skipped over the bullish part of that,
right.
which is that a bunch of Ether gets locked up.
Yeah.
So you can't forget that bull side. And that is my complete rebuttal of the bear case for the merge.
It's not complete. Come on. You know, it sounded like David wants to get on a podcast with Jordy and really hash this out and have a debate. But I also remember what happened to the last guy who did that. So
well,
maybe
Ryan,
we'll keep
the
this
last
in
guy was
article
defending Terra and I'm defending Ethereum.
I do think if there's demand in Bankless Nation, if you guys are excited about this, let us know. Maybe we'll have a Hal Press plus David plus Jordy plus another bear debate on this. Maybe we'll get Checkmatey in the scene or something.
Oh God.
Anyway, a lot of discussion about this, and I think it's really fun to look at both sides of the argument. David, let's get to this. Uniswap has a brain. That's what you've been saying in the tease to this. What do you mean by this? How is Uniswap getting a brain?
Uniswap Uni Governance voted overwhelmingly at 86 million to 770, so like call it 99.9% yes, to create the Uniswap Foundation. We've talked about this, the precursors for this. There was a governance proposal and then also a sentiment check, but now formal vote, token snapshot vote has gone through overwhelmingly in support of creating the Uniswap Foundation. So what does this mean? What are the details of this? The blog post says there is work to do to help Uniswap reach its full potential. The governance process has too much friction, the ecosystem is too difficult to navigate, and the UGP Uniswap governance process in its current form is not able to fund the most ambitious and impactful projects. We want to change that. Today we are excited to propose the creation of the Uniswap Foundation, which has the mission to support the decentralized growth and sustainability of the Uniswap protocol and its supporting ecosystem and community. Today we are thrilled to propose the creation of the Uniswap Foundation, and then some details: scope, team, budget, and governance participation. Scope, the UF, the first foundation of a major protocol to go through the community governance process, will support the protocol's decentralized growth, reinvigorate governance, and serve as a protocol advocate. The team behind this is going to be Devin Walsh, who will serve as executive director, and Ken Eng, who will serve as head of operations. And they also have a team of 12 behind them. They've got some budget requests as well: $14 million of operating budget to cover a team for 3 years, and $60 million expanded Uniswap grants program budget to cover 3+ years. So they are requesting a total of $75 $74 million from the Uniswap DAO, which will be broken up into 2 disbursements, a first disbursement of $28 million. And lastly, in governance participation, also requesting 2.5 million uni to participate in governance primarily through delegation through usage of a new smart contract primitive called the franchiser. And this uni will be revocable by the DAO at any time and cannot be used for any purposes outside of governance. And so, Uniswap, getting a foundation. Nice.
Okay, so one question I have on that, David, is the $74 million that's going to fund the Uniswap foundation, where's that coming from? I would imagine it's got to be like uni token sales at some level from the DAO, maybe.
Yeah. If not already, then future sales. I don't know.
That's one interesting thing to check into. But like, am I also on the understanding that, so we have 3 pieces here. We have the protocol, right? Uniswap itself, which is not a legal entity or anything else. It's smart contract code. And then we have Uniswap Labs, which is the thing Hayden and team are doing that is venture backed, that is continuing to buy companies and create tools for the Uniswap ecosystem. And then now we also have this Uniswap Foundation, and their job will be to kind of steward the protocol itself a bit more and I guess grow it. Is that the model here?
Yeah, that's exactly right. And I've looked into the governance proposal. It's all coming out of the Uni token. Yes. So this is all funded by the Uni token. Mm-hmm.
So this will create some sell pressure, I think, in Uni in the short run. Now they're doing this in chunks, like first distribution of 20 million and then kind of the remaining. But also, you could say bullish on Uniswap getting a brain.
Yes,
if this foundation
that's
is
the
able
bullish.
to do
That's
more.
who cares about $20 million of sales pressure? That's a blip. Uni token is actually pretty illiquid. The point is that Uniswap can be just more organized. If you listen to our podcast episode with Hazu, these DAOs need direction and centralization. Centralization is not a bad word, and the foundation can do this. In addition to the two Ken Ng and Devin Walsh, we also have some advisors: Jesse Walden from Variant, Julia Rosenberg from Orca Protocol, Alexis Gauba from Open, and Hart Lambert from UMA. And then they also have already talked about some proposals that they're trying to get done, which is building Uniswap in the Cairo language for Starknet and other things that, like, I think the Uniswap without a brain just might not have been able to get done. So I think that is the reason why we should be bullish here, is that, execution matters.
And if you're curious to why it doesn't have a brain, why Uniswap Labs is not necessarily that full brain, I think the Hasu podcast is the answer to your question. But here's a nice meme: the Scarecrow. From
Scarecrow from Wizard of the Oz.
Wizard of Oz.
There's that one song where the Scarecrow's cuts. If I only had a brain. But this one's if I only had a foundation.
This is every DAO, by the way, dancing around like a scarecrow right now. Okay, this is cool. This is a tweet from Blockworks, but did you know, David, this is another chart from Dune Analytics. Nike and Adidas had NFTs last year. Nike revenue was $185 million.
Damn.
Adidas was 11 million. But in total, so Nike absolutely swamped the floor with Adidas. But think about how much money that is for Nike from NFTs. What do you think the cost of these NFTs were?
Very little.
3 million?
And Ryan, I bet you the biggest cost was legal.
10 million? Yeah. But think about these profit margins. So if you think that large corporations are just going to pass up this
free
kind of
money.
opportunity. You don't understand how
Look at
large
that
corporations
secondary
operate.
trading volume of Nike NFTs. $1.3 billion of secondary trading volume.
Crazy.
They have royalties on that.
Look at these other brands too. Dolce & Gabbana are here, Tiffany's here, Gucci here, Adidas here, Budweiser here, Time Magazine here, NFTs.
Nice.
NFTs are just a fad, never coming back. Obviously.
Okay. So look at that data. There's 2 columns there. Primary sales revenue, $93 million for Nike, $92 million in royalties off of that secondary volume. Crazy.
That's crazy. Yeah, more companies are going to join this, and NFT market will be back, I'm sure. But in the short run, we are seeing some resurgence in some of the other classic non-corporate NFTs. Pudgy Penguins,
Pudgy Penguins pump 83% as Meta and Nansen executives join advisory board. Ryan,
Meta, Facebook, huh?
Yeah, right. You want to hear a funny story, Ryan?
Yes.
You know when we were talking about how I was moving wallets from a while ago?
Yes.
Well, I'm also slowly doing that for my NFT wallet and just getting rid of all these NFTs that I thought were dead.
Yes.
And so I sold my Pudgies literally 2 days.
No, you didn't,
before
David.
this happened.
David. Oh,
It was like perfectly ironic. It's like I sell these things just because like I don't really know what's happening with these things. These are just some JPEGs.
I would assume they're dead too.
Yeah, and then like literally
Pump.
like out of nowhere, like that has the biggest resurgence of all time. It was like literally the Pico bottom. It was fantastic. It was
That's
great.
why you listen to Bankless for your NFT alpha every single week, because Dave and I know what we're doing.
we know what we're doing with the JPEGs.
Do you know, we do know a little bit about DeFi, and this is kind of a blend of DeFi plus NFTs, this thing called BendDAO, which is basically like, I think of it as Maker. It's like collateralized loans backed by NFTs. So, but there was kind of a crisis last week with BendDAO. What happened?
Yeah, so BendDAO NFT liquidity protocol, of course, you can put your NFTs into BendDAO and borrow ETH against them. Some of the top NFT profile collections in there: Azukis, Bored Ape Yacht Clubs, Clone X, CryptoPunks, Doodles, Mutant Apes, and Space Doodles. And the thing is that once upon a time, BendDAO had about 18,000 ETH earlier last weekend, and that went down to 15. Not 15,000, 15.
Yikes.
15 ETH. It's currently back up to 4,500 as of a couple days ago. But basically what happened was that all of the ETH, you lend your ETH to BendDAO, and then you get a yield on that ETH, very strong yield. And then that BendDAO lends out that ETH to people that collateralize their NFTs. You could get an 80% yield on your Ether because they were in such a short supply of Ether because all these NFT collateralization people were borrowed up all the ETH. They used all the bandwidth. It's like if Compound utilization, if you put like if Compound has like $100,000 of USDC in it, and then like there's $98,000, 98% of that USDC is utilized, they're going to jack up the interest rates to incentivize people to pay back their Ether. So what's going on here is they jacked up the interest rates or yields paid to Ether lenders, and they also, what they did in order to fix this just like credit crunch they had, is that they passed emergency parameters to progressively lower the liquidation threshold from 95% to a new baseline of 70% incoming on September 20th. So it's going to go from where it is now at 95% to where it will be in the future at 75% or 70%, basically like making liquidations more likely to happen, it's like increasing the interest rates. The BendDAO, if it's like a MakerDAO, they're increasing the interest rates and making more strict capital requirements for NFT lenders so that they can pay back their loans and get Ether back into the coffers. I will say this is not a failure. This is actually quite the opposite. I would say this is a big success. It was so successful that all the borrowers used up all the Ether, and they just had to jack up the interest rates. The first time MakerDAO had to go through a cycle, DAI was trading below a peg, and they had to jack up interest rates from like 0.05% to almost 20%.
I remember
And I feel
that.
like this is the same thing with BendDAO. It's like, yo, everyone's using the protocol. We ran out of like credit. We need to jack up interest rates so we can like get more money in the system.
They almost went insolvent in the process, right? So they bent, they didn't break, but like they almost.
I wouldn't call it insolvency. They just had more loans outstanding than they could issue. They couldn't issue any more loans. Because they didn't have enough money in the system.
There is a great explanation, if you want all the details, from William Peaster, who does know a thing or two about NFTs in Metaversal, and you can read through that.
Ryan was joking earlier. We don't know shit about NFTs.
I think one of the things, though, David, is that BendDAO has definitely learned through this episode is that NFTs are not quite as liquid as maybe they thought they were. So it's one thing if you're selling ETH as collateral in a maker-type auction because you have to liquidate. It's another thing when you've got like 50 Bored Apes and you're trying to find buyers for those things. Of course, that's what makes them non-fungible, and lower liquidity profile in them right now. David, Gensler's back. God. What's he saying now? He wrote a op-ed in the Wall Street Journal. I read part of this. It was also paywalled. Maybe there are a few choice tweets or choice quotes we can take out of it, but basically his take is there's no reason to treat the crypto market differently from the rest of the capital markets just because it uses a different technology. The fax machine and the internet are the same thing. That was my paraphrase. That's not his paraphrase, that end part, but like I feel like that's kind of what he's saying. Right. What are your thoughts on this, David?
He also made a video on this, and basically he's saying like, oh yeah, like crypto markets, traditional equities markets, they're the same thing. Therefore, we should regulate both of them, which is a hot take. But also just like you're trying to like have your cake and eat it too. It's like you're saying you want to regulate the crypto markets, and therefore we should treat crypto markets like the traditional equities markets. But then you're also not treating us fairly. And this is what Kobe said when he followed up and says, "Sounds good, spot ETF then." Because if Kobe said, or if Gensler says, "Okay, we're going to treat the crypto markets like we treat the traditional equities markets," that means we get spot ETFs. That's what that means. And so he says, like, the SEC, according to Gary Gensler, should regulate the crypto markets just like they regulate the traditional equities markets. And but then he also doesn't want to treat us like normally.
So there's a double standard at play.
Yeah, huge double standard.
There's a double standard, but he also doesn't understand that this is a much different technology.
It's literally not like that.
It's kind of like covering your eyes and plugging your ears and just kind of ignoring the differences between crypto and the traditional equities markets, of which the differences are also vast. These
Massive,
are two different technologies. It's fax machine versus internet.
And I would definitely say that Gary Gensler is playing this narrative game. He knows they're not the same.
He used to teach classes at MIT about blockchain.
And so he's doing a PR stunt saying, hey, the SEC is going to regulate the crypto markets because they're the same as equities markets. There's no new magic here. The SEC is going to regulate these things.
It's just not hard. We can have a nuanced conversation about what pieces are the same, because there are parts that are the same as the equities markets.
Some of these things are securities.
Are different. Let's have a nuanced conversation about that, and let's get some clarity. Mark Cuban had a take too. He says to Gary Gensler, who says there's no reason to treat the crypto market differently. Just come in and talk to me. Mark Cuban says, come in and talk to who? Set up an appointment. How? You using Calendly these days? Since you understand crypto lending and finances, why don't you just publish bright line guidelines you would like to see and open it up for comments? We don't want regulation, legislation by Wall Street Journal op-ed. All we're asking for at some, just some clear expectations.
Treat us the same,
bright
like you said
guidelines. Or even treat us the same and don't have a double standard. Very confusing here. But seriously, Gary, come on the podcast. I think the best way of clearing all this up is to engage with the crypto community. That's what you should be doing. We'd love to have you on Bankless. Sincerely. We've had Hester Peirce on. We've had other CFTC regulators on. We would love to have Gary Gensler on. Pretty friendly. We could talk about this. Give us your perspective. David, you have a take here.
The thing is, people outside of the crypto industry have noticed Gary's lack of popularity. And so this are also an article that came out in Forbes, I believe, Forbes, was titled Gary Gensler, resign, from a writer called Rosalind Layton from the International Tech Policy. Not a crypto person, but like Gary Gensler is like losing the public support, like left and right. And so Gary Gensler, got to win hearts and minds. And you can do that by coming on Bankless.
Yeah. We don't want you to resign until you tell us what you really think about crypto, and we can have a good conversation. First, come on Bankless. All right, David, do you know Coinbase's ENS integration is finally out in the wild? What does this mean?
Yeah, so this is in the Coinbase wallet. I'm pretty sure not the normal Coinbase consumer app. But if you are a Coinbase wallet user, you get an ENS name built into that wallet. So this is a user who's got debanked.cb.id. Interestingly, Ryan, not .eth. Did that catch your attention? There's no .eth name, but it is actually an ENS integration. And so from the article, it says, on a technical level, both cb.id and .eth can be used on multiple networks. We determined that most users associate .eth's IDs solely with Ethereum, and so Coinbase chose cb.id because they want to make it easier for people to understand that a username is not tied to Ethereum and can be used on multiple networks. However, did you know, Ryan, that your .eth name can work in Bitcoin wallets and Litecoin wallets and Dogecoin wallets by run by the ENS standard?
Yes.
And so Coinbase Wallet is just kind of making that a little bit more formal. cb.id saying, hey, this can work for your Ethereum address, but it can also work for your Bitcoin address. It can also work for your Dogecoin address.
What's happening here? Coinbase is just giving these to all of its users?
Yeah.
Basically?
Yeah, and all of its users who are using the Coinbase wallet. Yeah.
Users are becoming decentralized. Either claim your current username or decline and get a random 20-character username. So you get your own ENS name.
You get one by default, yeah. Mm-hmm.
That's cool. What is this extension, though? cb.id. What is this?
I think it just means identifier.
Yeah, but I know. Yeah. But what? How are they getting a .id? Is this I guess I just.
This has something to do with DNS, and this
so
part,
there's a DNS.id, like a .com,
yes.
like a .org.
Yeah. So another fun fact of ENS is that it's actually DNS compliant. It also operates with the traditional DNS system, and I think I don't know the details beyond this, but like the .id is a DNS thing. So you can. Actually, Ryan, go and type in this into your URL. Ta-da! It worked. It took you back here. You already had the webpage pulled up. But
okay. I was like, you just sent me back to the same site.
Yeah, but it works.
Yes, it worked.
So like, if you have like,
cool.
this also works. I think this also works? No, this doesn't work with davidhoffman.eth, does it?
Debanked.
Let me find out. No, it doesn't work with davidhoffman.eth. But that's why, and so the .id name is a DNS name, and so
that's why it works in every browser.
Exactly, it works in your browser. Yeah. Mm-hmm.
But that's not completely decentralized because there's still some DNS linkage there, I suppose. But
whatever.
Okay, cool. That's cool.
Getting better. Yeah.
Swell. What is Swell? Are they another staking provider?
Yeah, staking as a service provider. Basically, Swell is a hybrid between Rocket Pool and Lido. So they have a permissioned validator set, which allows for capital efficiency, but they also have a permissionless validator set, which allows for permissionlessness. And so they had a testnet launch not too long ago. And now they have a guarded launch coming soon. And so Swell Network is coming out. New staking as a service protocol. We got to love that competition.
That's awesome. Also, more competition, of course, in Layer 2 world. So just a reminder, now I think there are 5 days. Is it 5 or 4 days?
5 days.
Okay, 5 days till Arbitrum releases Nitro, which is the next release of Arbitrum. And of course, the TLDR is this is faster, cheaper transactions for you if you are an Arbitrum user. Awesome to see Layer 2's upgrading as well. David, speaking of upgrades, you have an opportunity to upgrade your job right now.
Upgrade your job.
Okay? This is our reminder to you. To what, David?
Get a job in crypto because it's the most fun place to have a job.
Absolutely.
That's the rule.
What could be more fun? Number one jobs. I'm going to read some out for you. Masari is looking for a software engineer. 2 software engineers, one for media, one for market data. DYDX, back-end software engineer. Stakefish, a business partner. HR business partner. Stakefish, a back-end full-stack software engineer. Stakefish, front-end software engineer. Stakefish, DevOps engineer. Bankless, we need somebody to run our podcast, edit the media operations. Boardroom Labs, software engineer, DAO governance. Manticore Labs, manager of crypto marketing. Bankless needs a threader and a senior newsletter editor, a marketing coordinator at Vertex Protocol. Lots more. Bankless Academy needs a product manager. You can find out more, of course. Look at all these. I'm scrolling through them at the Bankless job boards.
For all the people that watch the YouTube, I'm aware my dancing is extremely cringe.
No one's ever said anything that I've seen, David. Must be great.
I can feel it.
All right, what's going on next?
Coming up next, we got questions from the nation. Which Layer 2 are you most bullish on and why? And also, how can you explain the merge to normies? And also, of course, some hot takes from crypto Twitter, the meme of the week, and also a fantastic moment of Zen coming out from Gabriel Haynes. It's about BitBoy, Ryan. So all of that coming up and more right after we talk to some of these fantastic sponsors that make this show possible. JUNO is bringing crypto-friendly banking straight into your checking account. With JUNO, you can send money from your JUNO checking account straight onto a Layer 2, like Polygon, Optimism, Arbitrum, and they have ZKSYNC and StarkNet support on their way. You can skip the ACH wait times, you can skip all the gas fees, and go straight from your checking account to an Ethereum Layer 2 in seconds. Inside JUNO, you can buy and sell crypto with $0 fees, and your JUNO checking account comes with a metal MasterCard that gives you up to 5% cash back on your spending. JUNO is also giving you $10 cash back on your first crypto deposit and $100 when you set up a direct deposit. This ad just writes itself, so go sign up at juno.finance/bankless. The Brave browser is the user-first browser for the Web3 internet, with over 60 million monthly active users. And inside the Brave browser, you'll find the Brave Wallet, the secure multi-chain crypto wallet built right into the browser. Web3 is freedom from big tech and Wall Street, more control and better privacy, but there's a weak point in Web3, your crypto wallet. And most crypto wallets are browser extensions, which can easily be spoofed. But the Brave Wallet is different. No extensions permissions are required, which gives Brave browser an extra level of security versus other wallets. Brave Wallet is your secure passport for the possibilities of Web3 and supports multiple chains, including Ethereum and Solana. You can even buy crypto directly inside the wallet with Ramp. And of course, you can store, send, and swap your crypto assets, manage your NFTs, and connect to other wallets and DeFi apps. So whether you're new to crypto or you're a seasoned pro, it's time to ditch those risky extensions, and it's time to switch to the Brave wallet. Download Brave at brave.com/bankless and click the wallet icon to get started.
All right, guys, we are back. Starting with the questions for the nation. Of course, a reminder, if you have a question for Dave and myself, follow Bankless on Twitter. That's Bankless HQ on Twitter. We tweet it out. You can reply to the thread, get your question answered. The first one is from 2commas.eth. How do I summarize and explain the importance of the merge and its implications to my normie friends who ask me about it? It's a good question from 2commas.eth. Explain it like I'm 5, David. How do you explain the merge to someone who doesn't know anything about crypto, doesn't really care about crypto?
God, these are always so hard. All right, I'm gonna go for it. Okay, Ethereum. It's the number 2 blockchain behind Bitcoin. It's the thing that created DeFi and like smart contracts and allows us to do things like decentralized finance stuff, borrowing and lending, trading, etc. So that's the big blockchain. It's got the majority of all economic activity inside of crypto, created NFTs. It's that blockchain. It's the big blockchain. It's proof of work, which is that thing that consumes a lot of electricity, which a lot of people in the outside world don't like. And it's always been proof of work, but it's always wanted to go to this thing called proof of stake. Proof of work works by if you lie to the blockchain, you basically burn electricity for no reason. And proof of stake works that if you lie to the blockchain, you lose your ether. Ether, the native currency of Ethereum. How proof of stake works is that you stake your ether to the promise that you're not going to lie to the blockchain. And if you do lie to the blockchain by trying to add in a false transaction, an invalid transaction, you get your ether slashed. So it's kind of like proof of work in that you just lose money, but you lose money a lot faster and a lot more quickly and a lot more money in proof of stake. So generally, the crypto world is like, this is just a better, more efficient way to secure a blockchain. We don't have to consume electricity. We also don't have to have Bitcoin be sold because of proof of work, because of all this electricity consumption. Because there's no electricity consumption, you don't have to issue as much ether to pay for that electricity consumption. And these stakers don't have to sell their ether. So it makes ether really bullish. End. How is that?
Pretty good. Pretty good. I think it's hard to explain, honestly. Yeah. Do you know, kind of what I go back to is just like buy $100 on Coinbase worth of ETH and then ask me questions as you're curious about it. So it's just like, I feel like,
but what if we're past that point? What if this is the question they're asking about?
then I get them to listen to Bankless and you explain your thing. I think it's like that. It's sometimes people aren't interested until they have some skin in the game. They actually have financial. I wasn't really interested, as interested in crypto until I owned some Bitcoin. And then I was like, oh, this is cool. Why are the numbers going up and why are they going down? What does this all mean? That's why I actually advocate, like, don't dump your entire net worth in here. But like, if you want to get into crypto, buy some first.
Do it.
Step 1, buy some. Just do it. Not financial advice. All right, that was the first question. Let's get to the second. When the merge occurs, this is from Eddie Coates. When the merge occurs, what, if anything, will ETH holders have to do? Will it automatically convert, or will holders need to sell out of the old and buy into the V2? Thanks, guys. Bankless podcast is lit. What?
Sick.
Sick.
Rock horns. Yeah.
Right.
Will you have to do anything as an Ether holder? No.
I'm so glad. I'm so glad the answer is no.
The answer is no. You don't have to do anything. You're going to have Ether in your wallet, and then you're still going to have Ether in your wallet. You will actually not notice a thing. The merge is a kind of like a software update. You know, when you plug your phone in and then it just like updates while you're sleeping. It's going to be like that. You're not going to notice it.
Not going to notice. And updates like this have happened many times in Ethereum's history, and you probably haven't noticed if you've been here for one of them. It'll just be like one of those. That's if everything goes well. It should go well, but nothing you should have to do. Last question from satkc.eth. Ask the question, which layer 2 scaling solution are you most bullish about and why? And he lists a few: Starknet, ZKSync, Polygon, Scroll. I can't help but notice, David, all of these have a similar theme, and they are ZK EVMs. Which layer 2 scaling solution are you most bullish about is the question, and why?
I am most bullish on... Yes, they're all great. They're all great. I'll give you different reasons why you should be bullish on every single one. Starknet, apparently, after listening to a podcast, which I'm about to talk in a sec, this Cairo coding language and this overall the developer support and like building out Cairo and accepting like updates from developers has been great. So the developer user experience for Starknet has been just like really good.
Adoption.
So developers love it. So they've been
furthest along in a lot of ways.
Yeah, and like definitely their BD skills are really strong. I think they were the first to market. So like Starknet. Like can't not be bullish. ZKSYNC, Alex and team have been around Ethereum from the beginning. They're also doing a separate an EVM compatible strategy with their ZK rollup. They just exude the values of Ethereum, and like we've just see adoption of things that like exude the values of Ethereum. Uniswap I would put in this category, and so like they just have like fundamental Ethereum alignment at their tailwinds. They've been around for a while. They're like friends with all the other developers in the space. They're just very well connected. And then let's go to Polygon. Polygon also has their proof of stake chain, which is not a ZK rollup, but like the most bullish thing possible. I don't know if this is possible, but if it is possible, it's really bullish. Is that their current proof of stake chain just rolls into their ZK rollup? If that's possible, really really cool. Scroll. The most bullish thing about Scroll is that it's got EVM equivalents. They are going for the very hard task of EVM equivalence, which is if you can deploy your thing on the Ethereum layer 1, you can also deploy your thing onto the Optimism layer 2 without changing a goddamn thing. And you can also deploy it to Scroll, which is a ZK EVM, without changing a goddamn thing. Also really bullish.
Super strong engineering team, though it's a harder problem, right?
Yes.
It's like all of these have different strengths.
Mm-hmm. They're all different flavors. So like I like many different flavors,
All
and
the
they're
flavors.
all bullish. They're
To
all
me,
bullish.
this question is like asking, which of your kids is your favorite? Like, I can't answer that question. They're all special.
I feel like you can't answer that question out loud.
No, it's true. Okay, I have 3 kids, and I love them all equally. Kids, if you're listening, you guys are fantastic. All of you equally. So are Starknet, ZKSync, Polygon, and Scroll. David, takes of the week. Let's get into them.
Takes of the week.
First take here from you.
Yeah, you want to
Read
read
your
it?
own tweet. No, I'll read your tweet, okay? It's better that way. From David Hoffman, my favorite version of the future is the one where global Forex markets are traded on a unicorn-themed venue. This is Uniswap, I imagine.
Yeah.
You think that's real?
I mean, I feel like that
happen?
is actually the most likely version of the future is when like global Forex markets are held on Uniswap. And just like Hayden and like his friend Carl and Vitalik, they just like unicorns, and so they made it a unicorn theme. And then like, Butterfly flaps its wings, and all of a sudden global Forex markets are like on this Uniswap traded or unicorn traded venue.
I still contend that Uniswap will be the largest exchange in the world, sometime in the next 10 years.
Yeah, that's right.
I think that is undoubtedly true, but we'll see. And that'll be funny when it is. Also, you have a podcast that you want us to tune into.
Yeah, I don't really know where to fit this into the roll-up, but here's my hot take. This podcast that I listened to is really, really good. This is Into the Bytecode from Sina. Great podcast, very technical, but also does a great job of breaking it down for the listener. And so this is Julian from Argent and Smart Contract Wallet. And they talked about just a number of things, like why smart contract wallets need to be the future, why smart contract wallets and ZK rollups go really well together, account abstraction, and overall the developer experience of Starkware and ZKSync. And so this is where I got that take that the Starkware team is just doing a great job just like making their developers feel good. So my hot take is that this was a good podcast and you should listen to it.
I've been waiting for Argent to get its legs under itself again, because I feel like we haven't yet seen the promise of smart contract wallets.
Oh God, no.
And I'm
No, we
hoping
have
that
not.
layer 2s bring that, but we still haven't seen it yet. And there's just such promise, such potential there. It's a little bit like layer 2s where there's promise and potential, but we just haven't fully seen it realized. Last take here. This is a poll take, actually. I'm showing the poll results here, but let me give you the A, B, and C. This is from Eric Wall. Option A, the merge will happen as planned in September. You vote on that if you think it will happen as planned. B, it will happen, but something big will go wrong, like proof of work miners will refuse to mine the last block, a major client consensus split, something chaotic. That's option B. Or C, it won't happen. It'll get postponed. All right. Before I clicked my answer, which is A, I thought that basically A would be the vast majority. I thought we'd get like 80 or 90%. But it turns out what? What are the results here, David?
It is A that got the most votes. 52% of respondents said A, it's going to happen as planned in September without any problems. 15% of people said, show me the results. So 15% of people are automatically off the table. 15% of people said B, it will happen, but something will go wrong. And then 18% of people said it's not going to happen, it's going to get postponed. So if you add B and C together, what do you get? You get something like 33%, 34% of people think that it's either going to get postponed or go wrong, and 52% think it's going to happen fine. And okay, so I've accounted for a 95% success rate in my head, and this is accounting for something like a 66% success rate. And so that discrepancy, if I'm right, means the merge is not priced in. That's my takeaway.
That is an interesting takeaway. It's interesting that 18% think it'll be postponed.
Bitcoiners, dude. Bitcoiners.
It's already been pushed as an update. It's happening. It's going to happen at this point. You don't even really have C as an option. That's just kind of I don't know. I guess if the world ends,
it's a little bit too late for C.
Yeah,
we have the client software.
And yet we have almost 20% of people, again, in this Twitter poll, but I think it's decently representative of crypto Twitter sentiment, saying that it's not going to happen, it get postponed. And it's we have a date and the software's been updated and we're just waiting for that date to be activated at this point. Anyway, I do think that there's some alpha there for us. David, what are you bullish on this week, man?
I am bullish on, that high value production studio that we were talking about.
The BitBoy studio you're creating.
The BitBoy studio. Well, as BitBoy exits, I hope to enter, and I'm going to turn into the new BitBoy. Oh, I'm kidding.
Wow.
But so we are thinking about, not totally sure on this, but splitting the Bankless YouTube into Bankless podcasts, which is our long form interview formats, weekly roll-ups, Monday podcasts, live streams, the podcasts that you know and love. But then also short form Bankless, 20-minute long, a little bit more just newbie optimized content. Your boy's got a teleprompter right behind the screen. I got scripts. And so we're trying to expand Bankless into new audiences, because there's a lot of people out there that when they come to YouTube, they go, oh, BitBoy, he's got all the best information. He shows me tokens like
BitBoy
Pop.
Audience, David?
We're trying to steal the BitBoy audience, and instead of feeding them candy and tokens that go to zero, we feed them junk food. We feed them the veggies, and so
with some junk food. There's some junk food around here.
Some merge, merge candy. Yeah. Not high fructose corn syrup, but strawberries and raspberries, still
organic.
Sweet. Organic, organic junk food. Anyways, that is what I'm bullish on, Ryan. There's a Bankless Productions, Bankless Studio, something, and that's actually aside from this Joe Rogan, Lex Friedman type studio I've got behind me, which it gets finalized and finished tomorrow, and then we're off to the races.
All right.
Yeah,
Bankless becomes BitBoy. That's going to be
Bankless
the
becomes
feedback.
BitBoy.
The new BitBoy is Bankless. Wow.
Ryan, what are you bullish on?
David, you were laughing about this before I hit record, but let me tell you why I'm bullish on the Constitution. Does that seem Here's specifically why, all right? That doesn't sound like it's overly patriotic, because, I'm reasonably patriotic, but I'm not a super patriotic person. Right. But I'm really into social protocols. And the Constitution happens to be a pretty big one and a pretty important one and a pretty good one, particularly this thing called the Bill of Rights. And where I got excited about it was when we were recording with Jake Travinsky. Right. And basically the takeaway is all of the OFAC sanctions and developer getting arrested and restrictions on privacy that we're feeling right now. What's super interesting is 250 years ago, the framers of the Constitution in creating the Bill of Rights already thought through these things.
Right.
We have these protections.
Problem.
It's a solved problem, and it's actually enshrined in the protocol that governs our country. It's sometimes we get overly afraid of OFAC, for example. It's what if we do this thing and they put me in prison? They're the ones doing the thing that's illegal. They're the ones that are doing the thing that is against the Constitution, that's unlawful. Of course, we have to prove these cases in court over time, but talk about the First Amendment in the Bill of Rights, freedom of speech, press, protest. This is code, all right? We've legal precedent. That code is protected as a First Amendment right, just like speech is. The Fourth Amendment, no unreasonable search and seizure. This is privacy. If you live in America, you have the constitutional right to privacy. Number 5, due process. That means the government can't come and seize your property without due process, without a court saying it's okay, without proving that you did something wrong. Okay? Digital rights. We have property. The government can't come and seize your ETH in the US. That is unconstitutional. All of these things. And I think it's a bit on the legal front. It's a little bit back to like getting back to the original protocol of the US, right? This is why actually I think that, some people are like, the US is too far gone. It's turned into a surveillance state, all of these things. I think that may be true over the past 40 to 50 years. We've veered into that. But if we can have a generation of people and a group of people who take us back to our roots, right? And kind of like the actual social contract this entire country is founded upon, then we can resurface and find our digital rights once again. Right. It almost sounds like I'm running for a political platform. I'm really not. But
you kind of are.
Crypto is a political movement, isn't it?
Yeah.
And I want to make sure that we protect these things. And I am into fighting the fight in the US because I think this is a decent place to fight the fight for digital freedom and for cryptocurrency because it's like baked into the social contract, baked into the narrative of the US. So why not do it here? Right. And that's what I intend to do more and more. Of course, it's going to be the Jake Travinskys of the world and the coin centers of the world doing it. But we're going to help through our platform and education to continue that fight.
Ryan is bullish on the Bill of Rights.
Yes, I am. On to lighter matters.
How do I get exposure to that? We're going to buy the Bill of Rights
before the merge.
We're going to start it.
Didn't we try that? No, we tried to buy the Constitution. All right, what are we looking at? Meme of the week.
Meme of the week. We have a guy doing like the pray squat, and he's looking at one of those what do you call those? A stack of rocks that are all balanced on each other, and we have like Vitalik and inflation, and then on top of that is a recession, and on top of that is Putin and a Fed pivot. Balance on top of that is a stock pump. Balance on top of that is SBF. Arthur Hayes Medium post, the ETH Foundation not selling, Degen Spartan bullish tweets, Jump Capital not selling, and then the ETH merge pump, and we are praying that the aligned rocks here allow us to have a bull market.
These rocks are built like a Jenga castle too. It does not look good. A lot of things have to go right in order for the ETH merge pump to happen is what this meme is communicating.
That's right.
But there you go. David, what are people in store for the moment of Zen if they're watching on YouTube?
Yeah, right. Okay, so this is Gabriel Haynes. He's the guy that's just like always like rapping and dancing. There was a rap from Gabriel and a song from his wife. And so that is coming up in this moment of Zen right after we get through Ryan's classic disclaimer.
Of course, guys, crypto is risky. Got to tell you, none of this was financial advice, but we are headed west. This isn't for everyone, but we're glad you're with us on the Bankless journey. Thanks a lot.
I don't care about you, BitBoy. No, not at all, not even €1. CEO of Jumping Creative, so you got something else to show, so let's all hear the BitBoy show. BitBoy, my friend, look like you shilling to the end. Pumping tokens left and right, Gucci suit a little tight, looking like a Turkish delight. You got too much stress, you got a sick bench press. You could have been a masterclass, but you got your head up your ass. You dishing out lawsuits like a hot potato. Your face is looking all red like a red tomato. Your mouth is full caviar that shows the world the boy that you are.